So I would like to welcome Jakub Michalik, who is the Head of International Institutional Affairs and Communications at ESMA, the European Securities Markets Authority, one of the institutions that also regularly takes part in the EU Asia Financial Services Forum. And Jakub, I think we wanted to look a little bit at some of the priorities within ESMA. But first and foremost, good morning to you.
Yeah, good morning, Nick, and good afternoon to our colleagues based in Asia. It's a pleasure to be here, and thanks to you and to ESMA for having me today.
Not at all, it's always a pleasure. Maybe to start with, ChatGPT and the other AI applications that Christina mentioned just now identified geopolitics as one of the main drivers in financial services at the moment. And obviously, we see an increasing competition between different jurisdictions to increase their respective international competitiveness. ESMA prepared a report and some recommendations on that. And how do you see ESMA's role in this competitiveness debate? And what specific recommendations would you bring to the table, Jakub?
Yeah, absolutely, Nick. The role of capital markets have been lined up by a number of recent developments, and clearly we in Europe have a number of challenges that need quite enormous funding. It's obviously the defense spendings, given the geopolitical situation. There's also the demographics. There's also the need to finance the digital and sustainable green transition, something which Christina just spoke about. And clearly that requires strong and deep liquid capital markets. And there's been a full set of different reports and recommendations that were issued in the past year or two on this topic. ESMA has issued its own paper, which you referred to in May last year. We set out 20 different recommendations how to create efficient and attractive capital markets in Europe. Obviously, all recommendations are important, and I will not go into detail of each and every of those, but just highlight a few areas where we believe an urgent action is needed and where we'll be working with the policymakers on the European, but also on the national levels to make it happen as appropriate. So the first area is clearly the participation of retail investors in the capital markets. Without the strong base of retail and households, and the shift from strong deposit base to a strong capital market base investments, that will not work. Therefore, we believe that the further work around the simple and appropriate investment products is needed, a stronger pension systems across Europe, and a potential taxation adjustments to create incentives for either retail investments. Then looking at the role of the EU companies should play, or what's the role of the European capital markets for the EU companies in ensuring funding for corporates and also for the SMEs. We're looking here clearly on the regulatory framework for the IPOs, and also how to ensure that actually staying as a public company is not incentivized. We also set a few proposals how to integrate further trading and post-trading systems in Europe to ensure the scale and more liquidity and the bigger size as well there. And clearly there are areas in the actual legislative and supervision, how to make sure that our policy making is more agile and more flexible. Also looking at other parts of the world, how their system is set up. We believe that more enhancement in rule making powers of the agencies, including ESMA, is something to consider. At the same time, also ensure more consistent supervision, more consistent supervisory outcome across Europe, given that 27 member states, and the supervision in most of the cases is split around different countries. You mentioned the issue of the competitiveness and burden reduction. That's a very fresh political topic. We as ESMA share this objective of the European Commission to look into the areas where you can You can simplify, in particular, reporting requirements that clearly has an objective to reduce costs and complexity from the companies. And also, we believe that there's a few areas where we can avoid duplication and also streamline some of the reporting. I'd like to underline the objective is not to deregulate, but to ensure the streamlining of the reporting. We've already started with a couple of technical standards that we review now. I'm talking here about a transparency regime under MiFID. I'm talking about transaction reporting under EMIR, talking also about digitalization of financial reporting throughout the ESEF system. So we will continue to work as ESMA with the national competent authorities across policy, supervision, and data, how to ensure that where unnecessary burden is there, that we try to limit that. But that's quite a timely topic.
Oh, thank you, Jakub, for that overview. I mean, if I go deeper into one of the issues you've mentioned, which is the shortening of the settlement cycle in securities markets. You and ESMA had recommended this last year. The Commission just came out with legislation to facilitate this. There's been commitment of cooperation with the UK. The US has already moved into this area. What do you see as some of the primary benefits, but also challenges within a 27 jurisdiction context of moving to T+1? And how do you see the collaboration between public and private authorities in getting this done by 2028?
Yes, indeed. T+1 is a very important priority for us right now. We were mandated by the co-legislators to develop a report assessing whether this is something that Europe should go for, and in particular assessing costs and benefits. We published a report in November recommending the move to T+1, which has been subsequently endorsed by the European Commission very recently with the legislative proposal. So the date is the 11th of October 2027. Seems like a long time, but it will pass very quickly. Also very happy with the alignment with the jurisdictions on the European continent, namely the UK and Switzerland, within this timeline. And indeed, we believed in our, what we put also in our report, that the long-term benefits are quite important to follow for Europe. So clearly that's the competitiveness of the European market. That's about also closing the gaps between those jurisdictions that already moved. You mentioned the American continent. There's also a few Asian jurisdictions who have been quite advanced. And obviously there's quite a lot of benefits around the reduction of risk around the CCP transactions and posting margins there as well. At the same time, we have quite a complex system in Europe in the post-trade area. We have quite a few CSDs, which are at the very heart of the transition, but there's also a need to invest in that change by all market participants throughout the investment chain. So there are less sophisticated players that will need to invest heavily in the IT, but also human resources to work to make it happen and to ensure that the numbers of settlement fails will not step up once we move to T+1. Obviously, that will be hard work, mainly on industry. We as ESMA will try to support it. We set up the relevant governance structure, which is a combination of private work streams, which are run by the industry group, but also which is all under the umbrella of the so-called coordination committee, which is chaired by ESMA, and combines also with key players on the public sector. So with this governance structure, with a quite high number of work streams, we believe that we can make it happen in giving the timeline. But yeah, I would not underestimate the challenge and looking forward for the good outcome there.
Maybe that was a Freudian slip that I referred to 2028. You're right, it's of course October 2027. But well, let's see how it goes. But we're very excited about that process and the work that you play in coordinating this. Now, coming to the two themes of today's discussions, the two panels. The first one is, well, actually not in that sequence, but let me start with sustainability. obviously, a few years ago, we spent an enormous amount of time talking about sustainability and non-financial reporting, but we're seeing a certain political lessening of momentum, if I can call it like that, not least because of the US elections. How do you see the sustainability work stream continuing, and what do you see as some of ESMA's priorities in 2025?
Yeah, that's a very timely question, Nick. I personally don't really see the link with the losing momentum of the losing interest of investors in the sustainability investment. Actually, on the contrary, I believe that the efforts that we have been doing jointly, and both Jean-Paul and Christina were referring to the IOSCO level, we in Europe, under the leadership of the European Commission, have put a lot of efforts to crack down the greenwashing and also ensure legal clarity, and enhance the market confidence in that area. And I think that efforts have paid off. We published last year the greenwashing report, which also talks about the definitions about the greenwashing and serves as a guidance and also empowerment for the national competent authorities across European countries to supervise properly the relevant financial market activities to avoid the greenwashing, and will continue to do so. There's, in ESMA's work program for 2025, there's quite a bit of a policy work under the sustainability umbrella. In particular, it's about the EU green bond standards, which is quite key for European investments, but also for the ESG ratings when we have a regulation there, and ESMA will become a supervisor of the ESG ratings providers. We'll also continue to work with national competent authorities on technical assistance, capacity building, and also potential guidance on the relevant pieces of legislation. It is a moving target. We know that there are plans to adjust some of those frameworks, so we will need to stay agile as technical bodies, and also continue working closely with the ISSB and EFRAG to ensure that the relevant framework is up to date and is also pragmatically supervised by the relevant authorities.
Thank you very much. And one of the ones that we're also looking forward to, but I guess it's more from the Commission, is around the labeling of green funds, revisions that we might see to the SFDR. Finally, turning to technology, we were in a critical stage of the implementation of DORA, which entered into force last month. The final elements of MiCA, the crypto regulation, also entering into force last month. So maybe you could set out any remaining work or anticipated next steps in the implementation of these two files. And then Christina talked a little bit about what the SFC is doing to prepare for AI and how to respond to AI. The Commission again consulted on that last year. And be interesting to hear what is ESMA's approach towards the possible regulation or policy response to artificial intelligence.
No, absolutely. Financial innovation has been one of the key priorities for ESMA over the last years, and been quite busy with implementing and facilitating the application. As you said, MiCA is now since December in application. There's a transition period until June 2026, means that the crypto providers operate under the national crypto laws while they seek to obtain a MiCA license with a national competent authorities. There is quite a lot of interest on different approaches, and we as ESMA try to ensure a convergence between different national competent authorities in the authorization and then supervisory process. So that's very labor intense. Most of the policy work has been adopted in terms of the implementing measures. There are a few missing ones which we'll deliver and finalize in the course of this year, mainly around the reverse solicitation, also the guidelines around the qualification of the financial assets, and also some of the aspects related to market abuse detection. So very much in the spirit of implementing measures and working with national competent authorities to ensure convergence there. On DORA, that's also up and running. It's been a huge investment on the public side in terms of supervisors, but also in particular in the market participants. We have finalized almost all policy mandates there. At the same time, we do acknowledge that the timings have not been very generous in terms of the application and making sure that everyone's ready for that. We did a dry run last year, and we tried to support this also with the further clarification in terms of ensuring legal certainty and market continuity there. We're also preparing for the oversight framework with the designation of the relevant financial market participants, which will be subject to the oversight framework in the course of the last quarter of this year. So that's when the actual oversight work will start. And then on the AI, clearly a very big topic. We just published an article on the use of AI across securities markets in Europe in last year. We're also about to publish an article on the use of AI in asset management, which is also quite an important aspect here. And we've also started our coordination with the AI office, which is to be established under the AI Act there. So plenty of use cases across securities markets with quite a lot of benefits, but also with certain risks related, to the over-reliance, governance structure, and also cybersecurity risks there, and also the potential misuse by non-authorized firms. So there's also an investor protection angle to this that we will be looking into and might warn the public around.
Jakub, thank you very much indeed for this update, and also in particular the final piece on AI and referencing the cooperation with the AI office at the European level, because that's causing quite some, I would say, interest to see how that collaboration between sectoral supervisors and the horizontal oversight body or office in this case will work. And it's good to see you working very closely together. Thank you for being with us this morning, and hopefully see you also soon in person again in one of our events. Thank you.